going on, YouTube? All right, so this is video number 2 of Veterans Training Group. What we're going to do is, I think the dean might show up. If you want to join in, the link is right there in the chat. But the dean has been trading alongside me through the week. And I'm going to show you guys that you can do this with very little money. Of course, you can't day trade per se. And you get a cash account, you can do some more. But if you do a margin account, then you can't day trade unless you have 25K in there to day trade. Some platforms, I had to look into it, but I believe if you have a cash account, you can. So we'll see. But there is a way around it. You just buy, we're doing options. You just buy the option just before the market closes for tomorrow. We're doing weeklies, and we'll get in and we'll discuss what all that means. But we're waiting here to see if the dean pops in or not. Let me text him and see if he's coming in. I'll say, are you joining? Anybody in the chat knows what options are? We're doing basic call and put options. Here he is in the guest room. Here we go. We'll add him to the right. What's up, Dean?
What's up, baby?
Hey, man. So I was telling everybody that, we're doing simple call and put options.
Right, exactly.
And if no one knows what an option is, it's a really simple tool. It's a way to control shares of stock without owning the stock. And it doesn't cost you as much money. For example, if you wanted to control, let's say, Carvana, because Dean, you've been doing Carvana, right?
Right.
Right. That's around what, $4, $4.25 a share right now?
Yep.
Right. So if you wanted to do 100 shares of Carvana at $4, it costs you $400.
Correct.
But with an option, options are in contracts, not shares. So one contract of an option is worth 100 shares of stock. So, for example, if you bought one option, that's 100 shares of Carvana, it might cost you, what, Dean? 25 cents, 20 cents per share?
Yep.
Right. So if it was 20 cents per share, you're controlling 100 shares of them, $20 instead of 400.
Right.
Right? So if you're controlling 1,000 shares, that'd be $4,000, and it'd only be 200
Exactly.
in the option. All right, so I'm going to show you my trades today, and I'm going to show you that you can do this with very little money. And then Dean will let you, he'll talk about, I'm getting back because I can hear you through your speaker. You're playing the video, right? Dean will give you the breakdown of, if you only make this a small amount per day, what that would equal for a year. And it's pretty astonishing, right, Dean? He's trying to figure out his technological deal. Right, Dean?
Well, how do I stop this back feed?
Turn off the speaker on the YouTube feed, because you're listening to the YouTube feed, and it's back feeding through. What are you doing? Trying to listen to it through it?
Yeah. How do I hear you?
Well, you hear me if you have a headset or something, right? So,
That didn't work. So how is it better now?
well, I can hear you. Can you hear me?
I can hear you.
Okay. So let's go over my trades today, and then I'll have you explain to these guys what a small amount per day would equal at the end of the year. Because you don't have to make a whole lot of money to make a difference in your portfolio, correct? Correct, Dean?
That's right.
All right, so you ready?
I'm ready.
All right, so let me bring up my screen. All right, can you see the screen, Dean? I'm going to blow it
Yeah,
up
I
'cause I know
see it.
your glasses. Okay, so here
I see
I
it.
played I played the SPY right there.
Okay.
Standard & Poor's 500. Now, I bought one contract at 80 cents. So that's 100 shares at 80 cents. It was a put, okay? And it was a 378. That was the price there. So I bought one contract, December 23rd expiration. That's when this was going to expire, was at the end of the day. It was a strike price of 378, and it was a put. So I was betting that the price of SPY was going to go down to 378 or lower, because that's what a put is. A put, you're betting it's going to go down. A call, you're betting it's going to go up. So if you take 100 shares, so that's what that is, right, Dean, times
Yep.
80 cents. So if we do that, 100 times 80 cents, it cost me $80 to do that trade, right?
Correct.
Okay. So now I go up here and I sold it for 98 cents. So I take the 98, subtract the 80, that gives us 18 cents, right?
18 bucks.
I times it by 100 because it's how many shares. I made $18 on that trade, right? So now I go up here, I deal Tesla, and I bought a call, a 121 call. That means I was thinking that the stock was going to go up to $121 or above. Expired today. One contract, that's 100 shares. I bought it for $245. So how much money is that, Dean? I had to put out
245.
$245, right?
Yep.
And this was $80 right here. So if you do the math on this right here, what's the percentage of my gain? I got 80 bucks.
About 20%.
Right, so I take 18 divided by 80. So I made 22.5% on my money. Now, folks, where are you going to make 22.5% on your money in a matter of minutes or a half hour, an hour? You're not, right? Let me erase that. I got to write better. I need Dean's handwriting.
You don't want mine.
So 22.5% gain right here. I'll put it down here so you can see it. 22.5. Now, go back up here to this call. So I got $245 invested. I bought it for $245. I sold it for $275. That's 30 cents. Right? Times 100 equals 30 bucks. So if we take 30 bucks, divide that by 245, What's my percentage gain on that?
What are you doing?
30 divided by 245, so 12%. So this was a 12% gain on that stop, on that option. So we're going to scroll down and see what else I did. Let me see if I can. I'm getting colors here. I gotta get back into my controls. All right. Here we go. So then, I lost my spot, Dean. Where am I? mRNA.
Lost your spot.
Yeah. I'm going to have to see if I can get this zoomed in a little better. Or unzoom it.
Zoom it. Zoom it like
Okay.
a magnifying glass.
You see right
'cause
here?
I can't see nothing.
I bought mRNA,
Yep.
one contract, the call, 202.50, 81 cents to open limit. So that cost me $81 for that right there. Let me see.
Limit to open. What's that?
That was the
Yeah,
price I wanted to pay was 81 cents,
Oh, okay. Right.
right?
Yep.
So this here was 81 bucks to start that. Now, I got to scroll up to mRNA to where I sold it. We'll go all the way up here. That's another buy. I bought another one. 202.50 call, same one. I bought it for $1, so that's $100 there. Then I go up to the cells where I sold them to. Okay, so I got 81 cents. I sold it for $1.09, which is 28 cents, right?
I'm so ugly.
Let's see if I can get my... I don't want to draw. Let me get that off of there. All right, so here I am. I got 28 cents times 100 is $28, right?
Correct.
So I made $28 on that one. The other one was $1.06 I sold it at, but I bought it at $1. So that's $26. Then I bought Tesla again right here for $1.77. I sold it for $1.98. That's 21 cents because these are all 100 shares. So that's another $21.
Correct.
And then I bought Tesla here, $1.74, sold it for $1.89. That's another 15 cents or another $15.
Correct.
And the most I put out was $202 at any given time, correct?
That's right.
So if you look at all those percentages, they're anywhere from 12% to 30 some odd percent on the money.
That's right.
So we could add these up, which is really easy. We got $18 gain there.
Mm-hmm.
Then we go up to this Tesla here,
That was 28.
and that's a 30. 245 and
okay.
275 is 30.
Yeah.
$30 gain. And then we go to this mRNA, which is 81. We sold it for $1.09. That's 28. So plus $28. This Tesla was $21. And then we go on up here to this Tesla here, which is $15. And then we go up to this mRNA, which was $1 and $1.06. So that's another $6.
Yeah.
So we got $118 profit. All winners. There's no losers in this order book, because that's all I did right there. You can see it. It would be in here if it was there, right, Dean?
It would.
These are the trades I did in E-Trade today. These are canceled because I was trying to fill them at a limit, and then the price is going up, so I canceled them and tried to fill it at a different price tag because I didn't do market. So I got $118. And the way we could look at this is if I take $118, and I was only in a trade at a time, so if we take that, even if you do the highest price that I was out, it was $202.50, right?
Correct.
Invested.
Yeah.
That was my risk at any given time. That was my highest risk. And if I take my highest risk, divide that 118 by 202.50, that's 58% on my money today. It's 58%.
Not too shabby.
Not too shabby, right?
That's right.
So how did you fare?
Well, I doubled my money on basically two options today. Well, I bought one yesterday. And then I held it until today. And we prayed all night.
Yes,
And
we
then,
prayed all night.
And then and then I bought another one this morning and held on to that. And then yeah, we doubled our money basically on that. So so I was up $30 profit, and I only put in $25.
Right. So here is my Robinhood account. Now I did this today too. So I did SOFI. I did 450 calls. Let me bring it up here. I did 10 contracts. Okay? 10 contracts at 15 cents a contract. So how much money is that, Dean? See if you...
I can't see it. Say it one more time. I can't see it.
Okay.
Contract,
I bought...
$150, right?
Yeah, $150. Because
Yep.
10 contracts is 1,000 shares, right?
Right.
Okay? So I'm controlling 1,000 shares of SoFi, which was going for $4.40 a share. So that's $4,400. And I'm controlling those 1,000 shares for $150. I bought that today, and then I sold it today for 17 cents. Bought it for 15 cents, sold it for 17 cents up here. That's only a 2-cent gain, but on 1,000 shares, that's $20.
That's right.
It's only $20. So I got $138 profit on those trades right there. And what I tell you, Dean, my goal on this channel is to show how you can make a little bit of money on stocks. You don't have to kill it. And my goal is 100 to 300 a day.
Right.
Right? So I'm at 138. Now, we didn't even get to the Ameritrade account that I have, my third account, which I did some stuff in there too, right?
Correct. Yeah.
So let me see if we can get those orders. And these are a lot of orders. This, I do Forex into this too, so I mean this is huge stuff here. But I bought 500 shares of XPON, 260, sold them for 263. That's $15. And then let's see what else we got on here. I got to get through all this Forex stuff. So that was the only trade over there besides the Forex. $15. And then the Forex, I was only up $8.82. I was up a lot more than that, but you know, I didn't get out in time and it was dropping fast. So I still made $8 gain there. So 15.8 is 23. So we got $23, 138. So we were at 161 or 160. So $160 today. Just messing around. On a half a day, because the market closed at 1, right?
Right. Not bad. It
Not bad.
was a good day.
Yeah, it was a good day. Tuesday is going to be even a better day.
Tuesday will be a better day. I bought
Tuesday
three
will be
more
good.
before the end of the day, so we'll see what happens. We're gonna start increasing. I just have to be careful when I'm out on the road, you know, so I can
Yeah, tell your story, Dean. You're on your phone, your very first trade. You're like, oh.
oh yeah. So I was on my phone. Jeff and I were on the phone most of the day. So I booked I'm thinking I'm booking a load. So I bought an option, first one. This is about a month ago now. So
Yeah, and you learn.
yep. So I bought it. I was at the shipper, and then kept talking with Jeff. He's so now I'm driving. So Jeff's kind of walking me through what the market's doing. So I had told him what I bought, and I said, "Man, I got to find a place to pull over." So I was on a 2-lane road coming up on the interstate. I just parked on the exit ramp, and I sold it. I just wanted to get off the exit and sell it. Well, little did I know, there's a bid and an ask price. Well, if you don't ask for more, it's kind of like dealing with a broker in trucking. You're not going to get more. You're going to get whatever the bid is. And basically, I broke even. I didn't make any money. I didn't lose any money. The truth is I did lose money because of the fee, right? The
Right.
commission. So I lost like $4 when I would have made $25, but I lost $4. And so I said, Jeff, it took money from me. Well, what did you do? And then we went through it. And he says, well, you just did it for the bid. You didn't put what you should have put, like a higher market price for the option. So, because a few pennies can make a big difference.
Right.
And so,
It can.
so it made a huge difference. And like today, when you and I were talking last night, and I was praying, come on, baby, you got to crash tomorrow, and it did. It crashed early, and it crashed all the way to my number, and then it started going back up, and I watched it for about an hour, and then finally it crashed again. Got below my number, and I got out. I made my money and doubled my money, and I got out. And then I bought another one and did the same thing. So, but then that's when I got flagged. So, yeah.
Right.
so I had to stop for the week. But I bought 3 more options at the end of the day, and but I went longer out. So I took your advice, and this way, I know I won't have a problem going forward. So,
Right.
yeah.
So Dean,
What's up, man?
let's talk about how much money you could do with this without having to put a lot of money out there. You could start an account
Okay.
with $500 or $200.
200,
So-
500, 100, yeah.
So let's say you make $10 per day on a trade,
Yep.
right?
Right. It's 200
Five-
bucks in 20 days.
5 days a week, right?
Yep.
Because the market's open, right?
Yeah. Right.
So that's $50 a week.
Correct.
And let's say you only trade 50 weeks
Okay.
times 50 weeks. $2,500 a year. That's it. Right?
Right. It's more than you'll get in the savings account.
Yes, because this is what we're trying to tell people. This is how we're going to teach this, right? This is how you make money in the market. It's the same. You got to take the same analogy as trucking.
Exactly.
So if you do the short game, this is like the short game. We're not trying to hit a home run from coast to coast every single time. Because if you try that, you're not going to do it. You're going to lose,
Good. Yeah.
right? Mm-hmm. If you stay tight in your own home area, you'll consistently, you can make this easy.
Yep.
I just showed it today. Every trade was a winner.
Right.
It
I would
was
have won
all-
those first 3 trades. I would have won if I wouldn't have made that mistake. I would
Right.
have been 3 for 3.
Right, you'd have been 3 for 3.
Yeah.
Today I went 2 Teslas, 2 mRNAs, a SPY, and one of those other ones, I can't remember the name of it now. But 6 trades, all winners. 6 for 6 today. So if you look at what I did, I made as small as $6 on up to $40, right? $30? $30. $6 to $30 was my average. Not average, but that was the scale today. So I made $160,
Oh, that's true. Right.
right? I made $160 today with only, I'll round it up to $203 at risk. This is my risk. And I made this, which is about 58%. Only playing with a couple $100. And that was it. So now, if we take my formula, right, Dean, let's take my formula in here,
Okay.
and we take this off, take this money here out, erase all this, and let's call it $100 per day. That's my minimum I like to make, right?
That's right. Yeah.
5 days a week, that's $500 a week,
$5,000. Well, actually, it'd be
times 50 weeks.
$100 a day. Five. Yeah. Well, that could be what $25,000.
25 grand in a year.
Yeah.
So today, just like when we teach your cost per day, right? If my cost per day I want to do is $100, well, today I did $160. So I'm 60 above this cost per day, or my trading day, right?
That's right.
Now, a few days ago, I did what, Dean? 300?
Oh yeah, you've had several days, 3, 4, 500. Yeah.
Yeah, I had several $300 days. I had a $500 day. And then I'll just call a $100 day down here. I had to look it up. But for this week, that'd be 5, 8, 11, 12, 1,360. And my minimum I want to do in a week is 500. So this week here, I did almost 3 times what my goal is. So should we talk about what an option is, in case people don't know?
Yeah, you should actually. Hey, and Jason has a question, and
What is it?
you can help him. He wants to know how he can recoup his losses. But explain the option will help him understand how you can recoup your losses in something you bought, and just chunk it out little at a time.
Right. If you want to make money each week in options and you don't have the money to start a day trading account, me and Dean, we're trading weeklies. That's the expiration date. That's going to expire at the end of the week. And if you don't sell that option by the end of that week, you lose your price you paid for the contract. You just lose that money.
Right.
Because there's an expiration date. Options have 2 things. They got time. Well, they got 3 things. They got time, because that's the expiration date.
Mm-hmm.
Right, Dean?
That's right.
All right. So let's show what it is. It's like an insurance policy,
It is. Yes.
right? It's like a stock insurance.
Right.
So a call option is you believe the stock is going to go up.
That's right.
That's what a call option is. So you're paying insurance, a premium, right? You're going to pay a premium. We'll call it insurance premium. The right to control that stock for a small price. So options are in contracts. So one contract equals 100 shares. So all you're doing, you're saying if I buy one contract, I'm controlling 100 shares of that stock for the given time, the expiration date. So you have a strike price, and you
And
have
the strike price is whatever you're going to pay for.
right. You're gonna have an expiration date.
Right.
That's when it's gonna expire.
And just so people know, the expiration date, let's just say today was Monday, and they're weekly, so it's always going to expire on Friday.
Right, Friday, by the close of the day.
Right.
Right. So like I was playing with today's expiration date, which means if I didn't sell it, get rid of it by the end of the day, I'd just lose the money.
Right.
So for example, when I bought that one contract at 80 cents, that cost
That's
me
the
80
strike
bucks.
price. Right, but that's the strike price. Yep.
So then I had $80 on the line. If I didn't sell it any time between 9:30 in the morning and 1 when the market closed, I would lose this 80 bucks because the expiration date would expire.
Now I'm going to ask a question, Jeff, for the benefit.
Now the
of
strike price is what the stock you think it's going to go up to. For example, if we'll just use Apple. right? We'll use Apple. If Apple was traded at $140 and you said, well, I think it's going to go up to 145, then your strike price is 145. And then your expiration date, let's say you say it's February. Third Friday of February would be the expiration date. Let's say it's the 17th of February. That means it's going to expire the 17th. You think it's going to go up to 145 by then. You got 2.5 months. And your price for that, let's say they're selling it for $1.50 a share. So 100 shares at $1.50 would cost you
$150.
$150. $150 to control 100 shares of Apple, which if you paid, let's say it's going for 140, it would cost you $14,000. Well, actually, 100 shares would be $1,400.
Right.
Sorry. $1,400, right? We'll erase it. I was thinking of 1,000 shares. It cost you $1,400. But now you're controlling it for only $150. A lot of big difference, right?
There is.
So people say, why do you want to do that? I mean, I got stuff all over the screen. Let me erase that. Well, this is why it's insurance. Dean will follow this because he's an insurance guy. So if Dean bought 100 shares of Apple at 140, he'd have $1,400 invested, right?
Yep.
I come along and I buy one contract, the call contract, 'cause I think it's going to go up to 145. Let's say they're going for $1.50 a share. I pay $150. This is what I have on the line. Dean has this on the line. Now, if it doesn't get to 145, I'm sure not going to exercise it and buy the shares, but I would sell the contract way before then if it got there, because your contract goes up in price as the stock rises. So let's say Apple went down to 130 a share. It's down $10. Now let's say, go further. Let's say it goes to $100 a share. Dean's down $40 a share, right? Or
Yeah.
$400. Now, it comes to the expiration date of 17 February. I couldn't get rid of this contract because it kept going down, not up. So this $1.50 goes down to 90 cents, 80 cents, 10 cents, basically worthless. Now, am I going to exercise the option to buy these shares, these 100 shares? No, because I'd have to buy them at 145. So it'd cost me $1,450.
Right.
So I'm out $150. Dean, if Apple don't come back up, Dean's out $400 already. Because I'm not going to buy 100 shares at 145 when I could just let this 150 go away and I could buy them for 100. Correct?
That's right.
So it's just an insurance play. But you want to sell the option and get rid of it before the expiration date. So you want to make sure you want to make sure you're right, or try to be right.
Right. So Jeff, so for the benefit of the people watching, so if you buy it on Monday,
Right.
based on this scenario, can you sell it sooner?
You can
If
sell
you
as soon
see
as you
it
want.
Right. Exactly. So can you limit your losses?
Yeah, right.
Okay. Right.
So I'm trying to get this stupid thing to erase, but it won't erase. Here, I'll just do a new one. It's locked up. It's locked up, Dean.
Man, you were burning it up.
I burned it up, man.
You were going down, man.
I was going down, man. There we go. I'll show you what Dean means about getting rid of it, right? I should just cleared the whole screen. But we'll just do a little eraser, like we're at school.
Right.
A little scratchy on the chalkboard. All right. So let's say I bought one contract of CVNA, and it cost me, they're going for about what, Dean? 40 cents, let's say.
Yeah, something like that. Yeah.
Right. So I bought one call, and let's say it was January expiration date. This January, I paid 40 cents a piece, so that's $40.
Yep.
And with options, you got some things happening here. And let's say Carvana stock price, we did the $5 strike, cost us 40 cents. Let's say the price right now is at $4.50. I think it's going to go to $5, so I do the call. Carvana goes to $4.40. This probably goes to, let's say, 38 cents. Let's say that took a week. Now, our time is going down, right, Dean? We have less time.
Yep.
So this option's only we were 30 cents now because you got time going against you and the price going against you.
Yep.
So let's say it goes down to $4 and this goes to 20 cents. I could say, you know what? I'm at my loss I want to risk, $20. I sell it, I get $20.
Right.
So I just lost $20.
Not the whole $40.
Not the whole 40. So what you want to do is you could put stops in here. So if you want to play with, let's say, $400, and you bought 10 contracts, that's 1,000 shares. 10 times 100 at 40 cents is $400. Right away, you could say, I only want to lose $100. So you could put a stop limit in to sell at the limit of 30 cents. So if this goes down, if the price goes down, and that goes to 38, 32, 30. When it hits 30, it's going to trigger this sell order, and it's going to sell it.
Down $100.
You'd be down $100. And it's the same way. You don't have to watch this. If you say, I want to make $100, then you put a sell limit up here at 50 cents. So that way, if the price starts going up, this goes to 40, 45, it hits your 50, you're out. If it goes to 60, 70, 80, doesn't matter. You're out at 50.
Right. Right.
And
Now,
I do
Jason
that.
has Jason has a question. He said, or a statement, question statement. He says, I initially put in 1,500 on multiple things, and now they're down to 437.16. So even though you put 1,500 in, Jason, and you think you lost, you never lose until you sell.
So,
Right. The tricky part is, or the
well, see,
challenging
he's
part-
buying,
the
are you
crypto
buying
product.
stocks or did you buy crypto?
Right.
See, stocks, you never lose any money until you sell the stock. Options, you can lose your money because you have time and expiration date against you.
Right.
But you can make good money doing it without a whole lot of risk,
Right.
right? So I'll wait for Jason to tell what he did. If it was stocks or crypto. Because if it's stocks, as long as the stock doesn't go out of business, you still have the stock. So it might take 6 months or a year to go up, but you haven't lost nothing.
But even if he wanted to get out of it or to make his money back, he's still going to he would either have to sell what he has to use that to get into to trade some options, or just start, leave that money alone and then
Right.
find some options and do it that way, right? But
Right, you leave your stock alone, you throw a few $100 at the option plays, and you go that route.
Yeah.
But as you see,
Because once you pull that, once you sell it, then you're out, $900.
right,
I wouldn't do that. I would just leave it in there and take your chances.
and as you've seen, we played with small money in the first, when you've seen my portfolio of my orders that I did.
Right.
Right?
Yeah.
Yeah, so we were playing with only $80 at one time. The other time was just over 100. The other trade was just over 200. So I didn't do any trade over $200.
Right.
Because even at 1,000 share, the 10 contracts I bought was only at 15 cents. It was only 15 cents. So that was only $150. So for the course of the day, I did a $160 profit. And the most I ever put out was $202.50.
Right.
And what did you risk today, Dean, for the money you made?
About $45.
$45. And what did you profit on $45?
Almost 40. Hey, look, I got lucky today. I was praying last night. I said, "Come on, baby, you got to crash."
So you had an 88%.
Yeah.
Right? 88%.
Yeah.
Josh the Vegan says, what platform do you use for trading? I personally use E-Trade, Ameritrade, and Robinhood. I got 3 brokers I use. I used all 3 today. I showed those earlier, right, Dean? I used all 3. I traded in all 3 of them today. And I usually trade in all 3 of them every day. People say, why don't you just put it into one? Well, I could, but I put the money into Robinhood to trade crypto because Ameritrade, E-Trade, there's no really crypto. I have an Ameritrade account because I do Forex. E-Trade doesn't have Forex. So I do Forex over there at Ameritrade. Might dabble in little stocks over there, options, and then I do the E-Trade for options. So I use all 3. And I trade in all 3 on a daily basis. Shannon says, I'm going to start with $100 and see what I can do. All right, Shannon, you start with 100. You'll want to trade. You can't day trade. You can day trade 3 times, and then it's no more until they reset your day trading limit. So
2. Be careful. I would say 2.
Yeah, 2. You don't want to do the 3rd time.
Right. They'll flag you.
Yeah, you don't want to be flagged. So what you want to do is, if you got a good game like Dean did today, $45 or something, and it was up 40, you do the day trade. Take the hit. Right, Dean?
Right.
Take the hit.
That's right. Yeah.
But what you'll want to do is buy something towards the end of the day. If you watch the charts and everything, and we'll go over charts later, you think it's going to go up. If the market is on a ride and you know it's going to go up, you could buy that call option. And if you think it's going to go down, you could buy the put option. The next day, if you're right, you get rid of it. It's not a day trade. So we trade a little riskier. I do dailies. They're called weeklies, but my expiration date is the day that I'm trading every single day. Some
That's
of
what I
them
did.
I'll do the whole week out. That way you got a whole week for it to do. And Dean was doing the whole week on a lot of his, right?
I did. Well, I did 2 days. I
2
did
days.
today. I did a day, and then yesterday I did 2 days.
Right. So I got one. I got a weekly. It ends next Friday. It's AMC, 450 calls.
I got 2
I
of
have
them next
those.
Friday. I got 2.
And it's sitting right around 450. I mean, I could have got out of it today. I was up $70 on that trade. Dean, I was up $70 on that. I got 10 contracts of it. I didn't sell it. Now I'm down. Now I'm down to
would've got
50 or
out.
$60. But I believe it's going to go back above 450 before Friday. So I'm not worried about it. And then Dean's on the phone with me, so he knows I buy stocks too.
Yeah. I do both too. It just depends how it depends what I'm doing. I've been home most of the week, so
And I
had
doubled
some
down,
time.
right? Because I had some AMC. Dean was laughing at me. I had like 600 shares of it. That thing, it was up there nice in the fives. They come out with some stupid news. Pre-market, that thing was down $1.50. It was bloody. Dean was laughing.
I was.
It was down to 370, and I'm in it at 550. But what did I do, Dean?
Double down, baby.
I bought another 600 down there. It rose all the way up to like 480. I got rid of that 600, kept my original 6. Now that moved that price point further down because I made $400 plus on it, right, Dean? On that 600 I bought down below.
Yeah.
Just offset my price of the original 6. And I was going to do that again today because it fell back down, but I'll wait until Tuesday. If it goes back down to 4, I'll buy it again, and I'll keep my original 600 shares. And sooner or later, those 600 shares with the profit from trading the other stuff will basically be free stock, right?
That's right. Yeah, I mean,
No,
you need some luck. I mean, there's no doubt. You got to have.
Yeah.
You got to have. It's like trucking, right? You got to have. You got to.
But
have some luck.
Here's the thing. You got to know you're out.
Right.
Before you even get into a trade, you got to know you're out.
That's right.
You got to know your top and your bottom.
Yeah. Oh. Hey, look at if you're driving, so you can put your, like Jeff said earlier, you can put your limit on both sides. You can put your limit at the top, and you can put your limit at the bottom. And this way, once it gets to the top, you won't have to worry about it because you put the stop limit in for that. Make your profit, and it'll just do it automatically. You don't have to look at it all day, and so you don't have to worry about it. And same for the bottom.
Right, you want to know your entry and your exits,
Yeah.
right? So if we'll just use Carvana. Dean loves Carvana.
Oh man.
So let's say you want to enter at 450. The top is 5 you want out. The bottom is 4 you want out. This is your most you'll take for a loss. If you had 100 shares, right? If you come down here, you lose $50. If you go up to here, you make $50,
Right.
right?
Yep.
So what you could do, when you put in your order, you put a bracket order in. You got your bracket. So your initial order is 100 shares at 450. Gets to 450, it buys them for you. Right away, you have a sell at 5 and a sell at 4. So what this is going to do for you is, here's the stock. It goes up to 480, drops down to 420. It's riding this range. It's going to do nothing because it doesn't hit either one of these points. Now if it all of a sudden it takes off, it's 510, well, as soon as it crosses 5, it sells and you're out. If it goes down here and crosses $4, it sells and you're out. It goes down to $2, you're not left holding the bag. Because now you're down $200. Instead, you took a $50 hit and you take that money and move on. Right? So that's what Dean was talking about. You always want to know how much money you're willing to lose, especially if you do options. How much money you're willing to lose. Put in your order, your stop limit down there, so that way you know that's all you're going to get hit with. Now, can you put in an order to where you maximize on profit? Yes, you can. It's called a trailing stop. You know what a trailing stop is, Dean?
I do, but we talked about it.
Yeah, so I use trailing stops a lot, especially in Forex trading. So let's talk about a trailing stop here. Let me show the screen. Let's see if we can do this again. So trailing stop. All right, so what happens is, let's say I buy an option, Dean, or even a stock. We'll just talk stock. This works for everything, right? So let's say I buy Carvana at $4 and I put in an order to sell at 3 and I buy 100 shares. So I'm willing to risk $100, right? So this is my stop down here. Now it starts going up. I change this. Let's say it goes up to 450. I change this and I say, okay, I'm up $50, right? 100 shares at that. So I say, you know what? I want at least $25 out of this trade, correct?
Right.
So I'll put in a trailing stop order to sell at 25 cents less than the bid price. Because this is the ask. Let's say the bid is $4.49. Or we'll make it easy. Just say the ask price. So what this is going to do, it's going to put a line here, a sell, and this is going to be $4.25, right? Because 25 cents from 450 is $4.25, right?
Right.
And what this is going to do for me is, let's say the stock goes back down to $4.27. It doesn't stop me out. I still own it, right?
Until it gets to 425, right?
Now it goes up, $4.50. Goes up, $5. What happens?
It already sold it at 450.
No. I have a trailing stop. Okay?
Oh, right.
So What happens is when this gets back above 450, because my line's here at 4.25, right?
Yep.
And it's 25 cents below what this ask is. So when this gets up to, I'll make it easy, 475. This line is 25 cents less than that. It comes up to 450. Now my line's at 450. It goes to $5. Now my line's at 475, which means if this drops back down, it sells me out at 475, not 4.25. So now I make $75 on that trade. But let's say it goes up to $6. I'm still in it. If it drops below 575, let's say it does, it sells me out. Now I made $175 instead of only a few dollars.
Right. Gotcha.
So a trailing stop follows the ask once it gets above where you set this, right? And I got a 25-cent increment. So it keeps going up. As the stock goes up, the stop comes in and raises as the price raises. And then if it falls back down, the stop doesn't fall down. It stays right there at the last one. If it crosses over, it sells.
Right.
So that's the way to make money doing it, and you can capitalize on gains on a stock that's rising. I'm going to have to do an Uber in the middle of a snow blizzard. Let me start the car up, Dean.
Man, Uber rides never end, man. You got to start charging.
Yeah, I got to start the car up. I'm going to tell them I'll come and get him when I get the car warmed up.
Yeah, it's late out there. It's only 8-something here. What time is it? 8-something, 8:10.
So that's what we're going to teach on here, is all these strategies. And next week, I think I'm going to go live just on this channel, not on my other channel. I'm going to go live and we'll show the trades as we're doing it. Right? So you can see it. You can see it's either making a few bucks or losing a few bucks. We did pretty good. We're doing pretty good.
We are doing pretty good.
You do real well at this. One, you make a strategy. Two, you stick to it.
Yep.
You don't get greedy.
Right.
And you know your ins and outs before you even make the trade.
That's right.
And human nature is the biggest thing to try to change in this whole thing. Right? And the problem is this. You start doing well, you get greedy.
Yep.
You start not following your own rules. Then you get burned. I've been doing this a long time. I've already been through that. I've been through that, Dean. Right?
Yep. Just don't, just start with whatever you're comfortable losing.
Right. It's a mindset thing too. I mean, even Dean, he's on the phone and he's going nuts. He's going nuts, man. It's like, dude,
going crazy.
we're only talking $15.
Man, I was doing
We're only talking $15.
That was last night.
Yeah.
Make it rain, baby. Make it rain. Oh,
Yeah.
I was off the chain last night, man.
You were.
Because I had got burned yesterday, and yeah. Well, that first one I did a month or so ago and screwed it up. So irritated. I'm like, oh my god.
and you know how I am. I don't lose any money. I hate losing money. Oh,
Yeah, you're like,
I don't like
man.
losing money.
And I was like, Dean, it's $15, bro.
I don't care if it's
Yeah.
$1.50. Hey, the Kardashian twins, whew, brother.
No, but you were waiting for more. You were waiting for more. And I was like, what was it today? You were up.
Well,
Didn't you try to sell it? But it didn't, something happened. And then later on, now you're up $40.
yeah, I saw it and I was out. I was running some errands today, and then it was it dropped. I mean, it crashed early. And I thought it would. It crashed early, and I didn't sell it, and I should have, because it got all the way down. I mean, I would have made a lot of money. And I said, no, I'll just keep waiting. Well, then it took a ride, and I thought, man, this isn't good. And today was my last day. I bought it yesterday, so. But
Right.
then it crashed again, maybe like 10 minutes later. And then once it got to my number, then I cashed out. I just took whatever.
Right. You just cashed out.
Whatever. Well, and you know how it says bid and ask. So I didn't do. I waited until it said low likelihood, right? But I didn't care. I'm always, just like brokers, right? I'm always going to try to get, more, right? So I was like, no, I'll try 3-4 cents more. And it took like 10 minutes, but they gave it to me. So,
Right.
no harm, no foul, right?
But that's the thing, that's why I thought I'd bring this to a lot of the drivers out there. If they wanted to join and follow along, I'm going to start doing trades live. During the day, I'll just leave it on. So you can just pop in. I might not be talking, but you'll be able to see the screen. You know what I mean, Dean?
That's right.
And then,
Well, and you look at, if nothing else, it breaks up the monotony,
Right.
from trucking, right? So give you something else to do, learn something else. Maybe you make a few bucks. I mean, look at that. We talked about it. If a guy or a gal just made, 15, 20 bucks a day, that's $400 a month. That's $480 a year. I mean, that's, or no, it'd be $4,800 a year.
this is $4,000. Yeah, it's close to
Yeah.
$5,000 a year.
Yeah. So,
And then if you only write half of those trades,
right.
and we're at $2,000 a year, there's no bank in this country.
No.
Well, look at today. I was at
58%.
58%.
Yeah.
58% on my money.
Right. A little more risk. Right. A little more risk, but hey, look, and we have a mixture in trucking of young folks and middle-aged folks, and a lot of investors. And this is just from my previous life, but they're all going to go they're all going to use the rule of 100. So if you're 50 years old, a lot of guys in that profession will say 50% of your money should be protected, right? You don't want a whole lot of risk. And so you could just, if you're 30, then 70% of your money. I mean, that's just what a lot of financial planners will. That's the rule they used to use. I don't know if they still do it, but I'm sure they do.
So thanks everybody for watching. I have to do this Uber ride in the snowstorm blizzard. Pray for me.
Yeah,
No, I'll be
good
all
luck.
right. I got four-wheel
Good
drive. I'm
luck.
all right. Anyway, I'll go live this week. Well, maybe Tuesday. Maybe Tuesday. I'll fire it up, Dean. What do you think? Tuesday, fire it up.
Yeah.
9:30 in the morning, be live. I'll have it open where if you want to pop in and join in, we can just sit there and BS like those old guys on Trader TV. And
Oh man, those guys.
I'll have
are
a screen there, and I'll tell you if I'm getting into a position, you'll see it, and you'll see the money going up and down, and I'll show you how. And we just scalp a little bit off the top when it gets there, 10, 15, 20 bucks, 50 bucks, and do that a few times. Call it quits for the day.
That's right. It don't take very long.
And then in my other accounts, I'll be trading bigger. But I won't show those because that's not what this channel is right now. It's to show people that you can start out small and get in the game and build towards a better future. Or more stable future, right? For financial.
Right.
So far, I was 6 for 6 today.
Damn.
Dean was, you're
I was 2
100%
for
too.
Well, I was 2 for 2 this week.
2 for 2.
Yesterday and then today. But I got 3.
So it
next
does
week.
work.
We'll see what happens.
It does work. You just can't stay in them forever. The longer you stay in it, the less likelihood of success.
Yeah, it's too hard. Yeah.
Right?
Too many variables. Yeah.
Too many variables. All right, man. We'll see
All right,
y'all
dude.
later.
All right, we'll see.